Hello traders, welcome to Snipe the Trade, and today we're going to review crude oil. Now, as you may notice, we have been in a very strong bull market lately on crude. You can see that we have been trading inside this blue bullish structure, and of course the more or the bigger white bullish structure. Now, if I zoom in on my chart, you're going to see that we hit the lows at around 40 or 39.50 on August the 1st, and then we had a very strong bullish move to the upside when we hit this very thick area where we found some buyers, and of course we found some we found some sellers and we found some buyers closing or taking profit on their long positions. But after and around I think it's a 50% retracement here on it's a 61% retracement. We hit the 61% or the 61.8 Fibonacci retracement level once. Then bulls tried to move price up, but when we hit again this thick area, sellers took price down, and we hit the 61.8 again. And here is where bulls took control of the market, and we ended up breaking through this very thick area. As you can see, here is a very high volume zone where we bounced to the downside once, twice, and we tried to press through a couple of times more. But the thing that I wanted you guys to see is this. We have hit some very interesting levels. Right here, this red line at the 52 level is the yearly high. So you can see we hit it here on around June the 6th, if I'm not mistaken, exactly June 9th. And if we go back in price action, you can see that this is in fact the yearly high. And not only that, we have hit some very interesting levels. We have hit the 161.8 retracement level of the last wave of the move. This means that we have hit the 161 retracement level of this move to the upside, okay? I'm sorry, from this move to the downside. So basically, price bounced from the 48 level. We hit the 42.95 or 43 level, and then we retraced 161% from this move to the downside, hitting the yearly high. Not only that, we hit the bullish second target at the 261.8 Fibonacci expansion level from this dip. Now this is exciting, but because not only we are hitting the yearly high and very strong levels where bulls are going to start to take profit on their long positions, but we are going to find some sellers. And this is the 4-hour chart, okay? Now, because this is the 4-hour chart, what I'm going to show you is very interesting. Now, you can see that we have here what seems to be a head and shoulders pattern, but price is also trapped inside this triangle. So by no means we are bearish at this moment. There is a pattern that is being created at the moment. You can see that. Let me show you where the actual head and shoulders are. Here we have the first shoulder. Here we have the head of the pattern, and here we have the second shoulder. So price moved up. We created the first shoulder of the pattern. Then we moved up, hitting the yearly high. Well, almost hitting the yearly high at around the 52 level, hitting those very important zones, hitting these bullish structures resistance. We moved down, and then we made the second shoulder. Okay, now we haven't we haven't even tested the neckline, which is this purple line at the bottom of the pattern, and the pattern is in fact complete once we break through this. But I think that we are not going to be bearish until we break with the 49 level. As you can see, this is a very strong, very important high in past price action, which we need to break for us to be short-term bearish on crude oil. The case can also be made for a bullish continuation. As you can see, we are hitting these very strong profit-taking targets at around the 52 level, but sellers have not pushed price down or have not broken with these important levels, making this triangle a continuation pattern. Now, if we break with the triangle, I think that we need to break also with these highs around, let me grab my crosshair tool, around the 5178, 5180 level. And if we were to be bearish on a breakout of the head and shoulders pattern, I think we should consider ourselves a very bearish or below the 49 and 20 level. Now, if we break to the downside on this pattern, the calculated target should be around the 50 retracement level of the entire move to the upside. Why is that? Because we are calculating from the top of the head to the neckline, and then we extrapolate it to the possible breakout zone. So if we do break with the head and shoulders, I think we could get a continuation of this bullish trend after the retracement caused by the breakout of this bearish head and shoulders. Now, if we break with the 49 level and the 48 level, there is really no other level here that will hold price until we hit let me grab the horizontal line, until we hit the 61.8 or around the 46.50 zone. So I really think that if we break to the downside, or if we break this head and shoulders pattern, we should pay a lot of attention to the 49 20 level, to the 48 level, to those targets right here at the 50 Fibonacci level, which are also these previous lows and previous highs. See, everything ties together when you analyze price action. We hit these highs. You can see that here there's a lot of rejection going on. Then of course there was some profit taking after this move to the upside, and after a small dip, we managed to break through and retest this previously broken zone. So basically our targets are, if we break to the downside, our targets are going to be around these levels. But if we are truly bullish on crude oil, because if we break with if we break with these levels, we are going to break with the immediate bullish structure, which is this blue structure right here. But we are still going to be inside this very long-term wide bullish structure, and I really think that if we break to the downside, these are the levels that we should be watching for a retest and maybe a long position or a long trade on crude oil for a break of this year's highs. Now I'm going to change the color of this zone, because this is our bullish zone, and I'm going to make it crimson. Why not? So basically what I'm saying here, or what I'm trying to analyze, is that if we break to the downside, if we break with this head and shoulders pattern, then watch out for the 49 and 48 levels, and those targets around the 50% retracement of the entire move to the upside. Then if this happens, pay attention to the 46.50 level, which is the 61.8% or the 61.8% retracement of the entire move to the upside, for a continuation of the bull market and a break of this year's highs. If we break to the upside, then this triangle is actually a continuation pattern.